Today we'll be looking at first stock splits, and then once we go over that, we'll be looking at reverse stock splits. First I'll explain what they are, and then we'll move into some calculation problems. A stock split is when a company increases the number of shares while lowering the stock price. This is always the case. The number of shares always goes up, and the price of the stock always goes down in a regular stock split. The reason most companies do this is to make the stock more affordable for investors as the stock price goes down without affecting the market value of the company. This will make more sense in a second. The most common type of split is a 2-for-1 stock split. This means for every 1 share you own prior to the split, you will own 2 shares after the split. So for example, if you owned 1 share before the stock split, you'd end up with 2 shares post-split. The one that you've already owned previous to the split, and then another one due to the split. One important thing to remember about stock splits is the market value of the company does not change because of a split. So why do companies do this, you may ask? Well, companies really mainly do this to try and attract investors because of a lower share price that they get after a split. For example, if Apple is at $100 and then they conduct a 2-for-1 stock split and their share price ends up at $50, investors might see that $50 and perceive Apple at being at a good value because the price per share is lower. However, the market value of the company is actually the same. This example should help clear things up. ABC Inc. has 1,000 shares, and each share currently sells for $10. So right now there's 1,000 shares, and each share sells for $10. Now, suppose that they undergo a 2-for-1 stock split. After the split, there would be 2,000 shares outstanding, and each share would now sell for $5. So notice that we started with 1,000 shares, and after the split, since it's a 2-for-1 split, the shares have doubled and there are now 2,000 shares outstanding. Now what about the price? Well, the price was $10 per share, and each share now sells for $5, so the price got cut in half. So notice how the market value of ABC Inc. remains constant. Before the split, we had 1,000 shares times $10 per share, which equals a $10,000 market value. After the split, our shares doubled to 2,000. Our share price got cut in half to $5 per share, but 2,000 times 5 is still 10,000, so our market value remains constant. Let's get into some examples. XYZ company currently has 100,000 shares outstanding, with each share selling for $15. What will be the share price if XYZ company undergoes a 5-for-3 stock split? In the last example, we saw a 2-for-1 stock split, which is the most common. In that example, each investor got 2 stocks for every 1 share that they owned prior to the split. In this example, each investor will get 5 shares for every 3 shares that they previously owned prior to the split. The easiest way to attack a question like this is to think logically about it. We know that in stock splits the share price goes down. So we know automatically that it's going to be less than the $15 it's trading at prior to the split. Here's the solution to this problem. As you can see, it's pretty straightforward. As we talked about earlier, we knew that it was less than $15. So the only way that we can multiply a value by this $15 and it would go down would be to have a value less than 1. So therefore, if we did 5 over 3 instead of 3 over 5, it would be higher than 15. So we know that the share price has to go down because it's a regular stock split. So the 3 will be the numerator since we are calculating price, and it will be divided by 5. So it's just this information, and we're putting the 3 on top, 3 divided by 5, because we know that the stock price has to go down, and then we're timesing by the 15 that I was trading for prior to the split. When you do that, you get an answer of $9. Let's use the same logic and apply it to part B. What will be the number of shares outstanding following the split? So we know that there's 100,000 shares outstanding prior to the split, and we know the company's doing a 5-for-3 stock split. Now it is asking us what the number of shares outstanding will be following the split. So we know that in regular stock splits, the share price goes down and the number of shares outstanding goes up after the split. So the 100,000 shares, we know that has to go up. We know that after the split, there will be more shares than 100,000. 3 divided by 5 gives us a value less than 1. So we know that timesing that by 100,000 will give us a value less than 100,000. So we know that can't be the right way. We know that it has to be 5 divided by 3 times 100,000, which gives us 166,666.67. Remember, the market value of a company should never be affected because of a stock split. To calculate the market value of a company, you multiply the shares outstanding by the price per share. So before the split, we had 100,000 shares, and we times it by the $15 price per share, and it gives us a market value of 1.5 million. So to double check our math that we did in the previous example, we can times the number of shares that we calculated, which was 166,666.67, and we times that by the share price that we calculated, which was $9 per share. When you multiply that out, you get the same answer of 1.5 million. So notice how our market value stayed the same before and after the split. So let's just do a hypothetical scenario to recap this. When a question asks you about the price or number of shares after stock split, the first thing you should do is think the price goes down or the number of shares goes up. If it's asking for the price, think the price goes down. I know that the price before the split has to get lower. That will help you formalize the rest of the question. So just to recap this quickly, let's say a company has 10 shares, or 100 shares. Let's say a company has 100 shares and the share is trading at $10 per share. And it is a 2-for-1 stock split. So a 2-for-1 stock split. So they have 100 shares right now. Each share is trading for $10 and it's a 2-for-1 stock split. We know that this $10 per share has to go down. So we know that it's a 2-for-1 stock split. We know it's going to be 1 divided by 2, because 1 divided by 2 is less than 1, which will make this go down when you multiply it by 10. So multiplied by 10 equals $5. So the new price after the split would be $5. The number of shares would be the opposite. We know it has to go up, so it would be 2 divided by 1, and it would be multiplied by the 100 shares that were outstanding before the split, which would give us 200 shares outstanding after the split. Moving on to reverse stock splits. So looking back at stock splits, we know it's when a company increases the number of shares and decreases the stock price. And again, most companies do it to make it seem like the stock is undervalued or to make it affordable for investors. They want to lower the stock price to make it more attractive and affordable to investors. A reverse stock split is the opposite. It's when the company decreases the number of shares and increases the stock price. Well, why would a company increase the stock price, you may ask? A lot of times it's to meet exchange minimum price requirements. So what I mean by this is some exchanges have minimum listing requirements, so your stock has to be selling for a minimum price. Let's say that minimum price is $1. If your stock starts trading at 80 cents for a sustained period of time, they might remove you off the stock exchange, which obviously companies don't want, because how will they get investors into their company if they aren't listed, right? So they want to meet those exchange minimum price requirements. So they want to increase their price per share, which again doesn't affect their market value of their company at all, but they just want to increase that per share price to stay listed on the exchange. So they can conduct a reverse stock split, which will decrease the number of shares and increase their price per share. Now let's apply the same logic to reverse stock splits. Reverse stock splits are simply the opposite of stock splits, and if you can get a good grasp on stock split calculations, you'll be able to do reverse stock split calculations pretty easily. So in this example, XYZ company has 100,000 shares outstanding with each share selling for $15. Question A asks, what will be the share price if XYZ company undergoes a 4-for-7 reverse stock split? Remember that in stock split calculations, the price went down. In reverse stock splits, it's the opposite, and we know that the price goes up after a reverse stock split. So for every 7 shares that an investor owned prior to the split, they'll have 4 after the split in this reverse stock split. So we know that the price is going to go up. In other words, we know it's going to be higher than the $15 that it was trading at before the split. So it's going to be higher than this $15. So if we did 4 divided by 7 times 15, it would be lower. So that would make sense. So we know that in reverse stock splits, when we're calculating the price after the split, we put the higher number, which is 7, and then we divide it by 4. So 7 divided by 4 times 15, and then when you do that, you get 26.25. So this is the price it will be trading at after the split. So what will be the number of shares outstanding following the reverse stock split? Well, we know the number of shares will go down, so we know it's going to be less than the 100,000 shares outstanding that were existing before the stock split. So 4 divided by 7 is the combination, because we know this 100,000 has to go down. So 4 divided by 7 times 100,000 gives you 57,000 shares outstanding after the split. And just to be clear, if you multiply this $15 by this 100,000, you get 1.5 million. And if you multiply this 2625 by 57,142.86, you get 1.5 million as well. So notice how the market value stays the same on this side of the line and on this side of the line. So 15 times 100,000 gives you 1.5 million, and 2625 times 57,142 also gives you 1.5 million. Just like in stock splits and reverse stock splits, the market value of the company stays the same.